Good evening, friends. Today, I wanted to talk about one important topic in personal finance, which is the perils of economic forecasting. In fact, this is something which many of the economists also fail while decoding the macroeconomic data. I would like to give how these predictions can completely go wrong, or what they wanted to give as an outlook, and what is the uh, outcome. After that, we'll give you some insights on this. Let me give you some thoughts in this regard. If you look at the uh, inflation which has happened during COVID and from first COVID attack to second COVID attack, many of the central bankers, including US and Europe, along with the best of economists and PhDs who have done it, they said that the inflation what they experience is transitory and it is not permanent. And once the lockdown gets into the normal things, things will fall into normal thing because they take this assumption based on the last decade's experience where the inflation is much lower. But if you look at the reality, the inflation has been persistently higher and it made the US Fed Reserve to increase the interest rate to a astronomical level where there was a huge debt to GDP which has happened, and the interest rates has gone up substantially from 1% to 5% in US, which was unprecedented. And of course, in the last 3 to 6 months only, we are expecting the interest rates to come down, but it has been persistently very high, where the predictions has completely gone wrong. And even in Europe, some of the countries like UK have increased their interest rates because of high inflation, and Japan, which has got negative interest rate, has completely have also increased their interest rate last year, 1 year before. So we are no more in the negative interest rate. So all the assumptions have gone for a toss. And let me give you one more example in this. During the AAA banks, especially US considered as America's biggest bank, the Silicon Valley Bank is graded as AAA with a very high rating and one of the largest bank. But it has completely gone bust where the rating has moved from AAA to D because of their higher exposure to select sectors, and this bank has bust also. So the analogy of having AAA is always being safe is also been completely done because the rating has to be done on a consistent basis, and the companies which are rated low will get re-rated, and the companies which are in the high rating will also get re-rated. So it is ever changing. It is cannot you cannot have a belief that AAA will remain as AAA ever, and a company which is rated low now will remain there. It will also get re-rated. So you have to go through the data in a much detailed manner. Recently, also, if you look at post Trump administration took oath, the he has implemented tariff across many economies, and many of the economists are having the assumption that US dollar will get strengthened, and it will be the central currency, and the emerging market economies and other things will go for a difficult time. But what has happened actually is that on the dollar index, which has got US dollar, euro, Japanese yen, UK sterling, pound, and other things, when it is pegged with the other dollar index currencies, it has actually gone down in the last 6 months. And nobody anticipated the rally in the gold. Most of the central bankers, whether it is Indian central bank or European central bank, UK or any other country, they have increased their gold reserve in lieu of US government 10-year paper. So what it meant is that gold prices have gone up substantially because of this uncertainty. So once again, the prediction has gone wrong. Why I wanted to stress this is that people expect us to give a short-term forecast, which is very, very difficult, which we don't do also. But what we do is that we, being an asset allocator and ensuring your capital has the margin of safety and also has growth, we identify your goals and plan your investments accordingly. So we never predict, but we will give a directional call that Indian economy will become third largest economy in the next 5 years. It can happen in the 4.5 years or 5 years, but we are there. We will always give them investment goals based on their time frame and what is important for them at that point in time. For example, if school education is coming in the next 2 years, we will allocate the capital in such a way that it meets that goal. If the goal is far away, we will take a call where the margin of safety is also there and you can also take the growth option. So we will design portfolio based on an investor's goals and asset allocation, being an allocator of capital. But we never want to forecast things, which is proven wrong many times by the best of economists, by the best of PhDs and the best of central bank governors. Okay, so hence I would like to drive the message. People should not forecast. Don't get into the herd mentality. Don't get into IPOs without understanding the valuations, and don't look at short-term gains, but always stay invested for long-term based on your goals to have a good investment experience. I hope this video gives you some insight on the perils of economic forecasting. Thank you for listening.